Yeah, look, it's actually something I'm quite passionate about. I
Yeah.
didn't know you were going to bring this up. And this makes me, you might sense this as well. It makes you a little unpopular sometimes.
Today we have Pivotal Metals. Pivotal has a portfolio of copper-dominant projects in the first-class mining jurisdiction of Quebec, Canada. We have Ivan Fairhall, Managing Director. I'm so happy to chat to you today, Ivan.
Yep, it's great to be on. Nice to see you again, Paula.
Yeah, it's been maybe a couple of years since we met. Yeah, I've been following everything what you've been doing, and I think there's a lot of exciting things that you have to tell us.
Sure, yeah. Look, thanks for having me on. It is an exciting time. We've been busy. I've joined the company 18 months ago, and in that time, we've done a lot, and really we feel like it's just getting started. These are the first time we've explored as a company really explored these assets in Canada. The company was previously focused elsewhere, and as we get into it, it's getting quite exciting. So I suppose just to recap, the main focus is the 100% owned Horden Lake project in Quebec. Project's got a large copper-dominant copper-nickel PGM deposit, about 28 million tonnes or 1.5% copper equivalent. It's majority held in a pit-constrained resource, and the growth potential is really clear. We've done some drilling, done some geophysics. We've shown the growth potential down plunge along strike regionally. We've done some preliminary met work that's demonstrated the really good copper kinetics and high NSR potential. And we're talking about a conventional flotation project here. And there's a lot of news flow sort of due to come out. During this quarter, we've got probably by the time actually this goes to air, we've got property-wide EM results. We've got the final met results. We're going to be updating our resource. We're drilling within the next week or so. When this goes to air, we'll basically be drilling. And there's a regional consolidation opportunity that we believe is there as well. So there's a lot going on at Horden Lake. We've also got a large, and so it's a project we don't really talk about, very interesting sort of large-scale greenstone belt exploration package also in Quebec. These projects have got very high nickel copper PGM prospects, high-grade resources, locally operated mine, and yeah, bonanza type stuff that we're going to follow up on. It's earlier stage. We own 100% of it, and yeah, it's going to be great to start to move the needle there and advance those projects as well in parallel, which we're looking to do this year. We'll jump into the presentation, and look, Pivotal Metals is exploring in Quebec. It is one of the great mining jurisdictions in the world, and we've got a number of projects there that we're really excited about. We've got quality copper nickel PGM projects. We've got the more advanced Horden Lake project. It's got a relatively large majority open pitable resource, and that's got a lot of exploration upside associated with it. Also in Quebec, we've got quite a large land holding of exploration projects that we refer to as BAGB. Those projects have got bonanza, nickel, copper, PGM mineralization, some discoveries, historic mine. There's also some high-grade gold, and we're really excited to be getting down there and exploring what looks to be a fairly large system with intense mineralization. Similar in Quebec, it's got flow-through share. Quebec's a great place to be exploring. It's a very sophisticated and modern mining jurisdiction, and it's got a lot of advantages to the company, and we'll go through some of those on an upcoming slide. As you've mentioned, we're copper-focused. Our assets are majority copper. I think most of your viewers would have heard you go on about it to great lengths, but copper is a universally bullish outlook. It's very supply constrained in a market where the growth is there's no question around the growth potential of it. It's the big questions of being for where are the mines. So having a copper dominant mine in a location like Quebec is really significant and something that shouldn't be overlooked, the location of the project in the commodity. And being a critical metal, you're seeing a lot of tailwinds, and we can even go into some of those details, the kinds of support that are coming to critical metal projects. And the other thing is, as a company, we got real re-rate catalysts. We've got a lot of news flow about to come out, and we've got a very attractive valuation on any basis. We go through some of the metrics, but on any metric, effectively, we're very well valued for a company with a project as advanced as ours, in a location like ours. And so there's a real opportunity to come in here and participate. Like I think as the market moves on from its sort of nadir, participate in a really exciting. So just to go into a little bit more detail on the assets, so the map here on the right-hand side, that's a map of Quebec. You can see Montreal in the south. And all those yellow dots, they're all operations. They are mines. Quebec's got over 20 operating mines. It's got a copper smelter just over the border. There's a nickel smelter. It's got infrastructure. It's a great place. So we're really right in the heart of a mining jurisdiction. We've got a large metal endowment, over 400,000 tonnes of copper equivalent. It sits in a 28 million tonne resource. A big chunk of that, I think a majority, and I think that's going to go up with our resource upgrade. It sits in an open pit that's at quite nice grade, and that's a really important component in sort of moving projects forward. Is having starting with an open pit. It's lower risk and lower capital, and a much more advantageous sort of scenario to be trying to move a project forward. And exploration upside. I mean, we've done some exploration. We've got some geophysics results. The property is really wide open, and there's a lot more to find here. So we're building resources on top of a really quite a nice project. And so that's just incremental value as opposed to I don't think we're looking for a mine. I think we're bolstering the value of a potential mine that's been discovered here. And so it looks like a mine to me. I come from an engineering background, it's about how to complement future exploration upside with what is a great base case project. So B8, that's Horden Lake, and in the south we've got BAGB. Like I said, it's a large land holding package, and bonanza grades on those projects, and a very prospective place to go and make new discoveries.
I think we've been talking about this. You've got a lot of sort of differentiators already, but I think the size of the deposit is a really interesting one, because the fact that, my dad was a copper porphyry expert, and I've been to, even as a kid, taken to this massive open pit. So you see the scale of these things, and the amount of capital that they need. Like, things have changed. The world has changed, and it's so hard and I've talked about this a little bit, maybe too much, but it's so hard to develop those, which we love them. Like, they're big, they're going to be producing, like Escondida is still producing. Like, it's been, I don't know, 40 years or so. I think the next, and we've talked with Lucho Sanz, with one of my partners, we've talked about this on the podcast, about the next wave being the intermediate or small to medium scale producers, which there are some in Peru, there are some in Chile. It's not so common in other places, but I think you've got something really interesting in that aspect as well. Can you?
Yeah, look, it's actually something I'm quite passionate about. I didn't know you were going to bring this up, and this makes me, you might sense this as well, it makes you a little unpopular sometimes to go out and say, the coal copper market is bifurcated. There's the very large, quite low grade porphyries, and then there's assets which a lot of people, and particularly in the last super cycle where there was this massive push for scale and capex was no object to developing a project. Projects were sort of poo-pooed for being too small, but what they are, the smaller projects, is they are higher grade, lower capital intensity, lower absolute value of capital, lower footprint, lower impact, and they can be built. Whereas the porphyries are the opposite. These have multi-billion-dollar capexes. And, look, if you find a top 5% porphyry, phenomenal outcome. You'll make a lot of money, and your life will be great. And the majors have to own those projects, and they will develop them in due course. Now, if you get stuck with a porphyry that's good but not great, you'll never be able to develop it yourself. There's very few people that can fund a multi-billion-dollar capex, so there's few acquirers, and they're not interested in buying sub-quality assets, and you can get quite stranded. So that's, think about the universe of buyers, the universe of owners, who is going to be able to finance and who is going to be able to build and operate one of these projects. I point to there's this other sort of overlay. There's no mid-tier. So the next mid-tier is going to be built on developing actionable projects that have good returns on capital and are just fundable because they're of a scale and an impact that can be done within a reasonable timeline. And I point to Sandfire. Sandfire's a $5 billion company. And you know what? They haven't built they haven't acquired any porphyry projects. Look at the assets that they have acquired. They're arguably the next mid-tier. They're well on their way. They're leading the pack to fill that void of mid-tiers that were all taken out in the last cycle. And take a look at the assets that they've acquired. Even a company like Sandfire isn't interested in building a multi-billion.
No.
Anyway, that's my take on it. So I think these projects are really interesting. I think there's going to be active M&A for them because they are actually the company makers of those next mid-tier champions.
Yeah, absolutely.
To touch on Quebec a little bit, look, as I say, it's a very established mining jurisdiction. There's multiple there's over 20 operating mines. It's a very supportive mining jurisdiction. And I point to kind of two people, great mining, supportive mining jurisdiction. Having like a pro-mining government it's not enough. Like, how do you actually help companies? Now, in Canada and in Quebec in particular, Quebec for critical metals, they have what they call a flow-through share scheme. And for Quebec and critical minerals, it's a huge tax credit that investors can get for putting money into mineral development, for exploration and development projects. And so essentially that allows us to raise all of the money that we spend in country at effectively 100% premium. Or to think about it another way, if I go out and I say, Paola, would you like to put $1 million into our project? What we do is I actually issue shares at 100% premium to an investor in Canada who just wants a tax credit. He sells them immediately to you at a normal financing price. But what happens in the process is you put in $1 million and I get $2 million in my bank account. And it is as elegant and as simple as that. There's nothing that you don't understand about this. It is a gift from the mining gods. And it lowers the dilution for shareholders and allows you to do more work, get more bang for your buck in a jurisdiction that's actually really well serviced with contractors, and the rates are very competitive, and you're effectively only paying half that price because of that flow-through shares. So that's great. That's something people really need to understand. And I suppose the other one is power. Quebec has among the cheapest power in the world. There's a hydroelectric complex in the north of Quebec that's the second largest hydroelectric complex in the world. It sits behind the Three Gorges Dam and in China. And they export power all the way down the eastern seaboard of the US. And power prices, you can look at some recent studies. Patriot, for example, their Patriot, well-known company, lithium project, they think using 5 cents a kilowatt hour in their recent economic study to give you a sense of the power costs. And power, as you know, is a huge contribution to the operating costs of these things. So access to cheap power, access to infrastructure, smelters, rail, what a great place to be doing business.
Yeah, and also you have the local investors that's, endowments and big money that they can mandate is we can only invest in Quebec focus.
That's right. Yeah, it's captive. There's a captive investment market there. They have it's sort of government and pension type, superannuation type money in the French Quebec system, and they have a mandate to invest and support Quebec focused companies. So there's that capital comes in at very early stages through funds like the CEDEX fund, and then right through to development stage. Invest Quebec is a government-owned fund that puts tens and hundreds of millions of dollars into the infrastructure components of projects, and and project finance, and it's a great jurisdiction to be trying to develop a project. So copper, look, we won't sit here and talk a lot about copper, but it is a fundamentally interesting commodity. I come from a private equity background. We spent a lot of time looking for projects. We had a very broad mandate, but really by the time we'd spent many years looking at different commodities and projects and thinking about what the right strategy is, we pretty much finished our fund in looking only for copper projects. And the more you look, the harder they are to find. It comes back to this scale question. And 180,000 ton copper projects that don't have multi-billion dollar, they don't exist, right? So you've got lots of projects that need to be developed, a lot of capital that has to go into this industry. The incentive price to maintain production at even modest growth rates, let alone some of the more spicy numbers you can get when you layer in exciting, AI, electrification. The world is electrifying. There's no question about that. you can argue where the power is going to come from, and you can get all political and talk about nuclear and coal. I don't care. It doesn't matter to me, because you've got to move the electrons around.
That's the thing. It doesn't really matter. And in the end, I think like I believe in the energy transition, but I also am a pragmatist, and I know that we need fossil fuels to get like 80% versus 20%. You know, the last time like it's just not realistically.
And you know what? It doesn't worry me, because the end of the day, the world's getting electrified. You know, no one's going to turn their lights off, and you got to move those electrons around. Copper is the common denominator to electrification. It doesn't matter where the power comes from. So growth is unquestionable, and it's not just modern growth, like what they call new age kind of growth. Traditional growth, BHP put this thing out the other day as a very, very long-winded and dry document, but if you go through it and take a look at some of the assumptions, they actually say there's more copper growth in the next 10 years coming from traditional end uses, as air conditioners, refrigerators, infrastructure build out in developing countries. You think about, the world is still, there's only very few of us by number that live in an advanced society. You've got those great graphs with like energy consumption per GDP, and you've got this huge cluster of the world that has a low GDP. There's not a single high GDP country that doesn't consume a lot of energy. So you either say, oh, those countries are destined to have a low GDP forever, or they're going to, improve their standard of living and grow and be prosperous. All of those things result in kind of consumption of commodities, energy, and the commodities that are required to move them around, like copper. This is the Horden Lake project. Look, this is a picture of the deposit, the road that runs by the project, 10 kilometres past the project, 10 kilometres within the project is a dual lane highway. I've got a picture of it coming up. It's a fantastic access to the project. Like, this is a flat, featureless part of the world, millions of hectares like this. And some people like to say they're 10 kilometres from some infrastructure, and you get there, you get on a plane, you fly, and you go to these weird places in the world, and you find that 10 kilometres feels an awful lot away when there's mountain ranges and rivers in between. So that's not the case here. We've got a great simple project in a great part of the world. It's a magmatic sulfide deposit.
Great.
It's got a couple of kilometres of strike. It effectively sticks out of the ground. It subcrops between a very thin layer of till. And we've got good grades, particularly for the open pit component. Like those are fantastic grades, 17 million tonnes at 1.38% copper equivalent. And I think we're going to see that open pit potential increase as we update our resource and as we put out some of the information that we've done around our geophysics and where we're planning drilling. With that drilling, and probably will nearly have started by the time this goes to air. And so we're keen to build out that open pit potential, because it's such a valuable kind of component as to how you get into these ore bodies. And these ore bodies open at depth. I believe it really continues a long way. We're looking to help people understand what that means, and that's very common for projects of this nature. They continue till they don't, and absolutely, unquestionably, we haven't found the bottom of the deposit. The drilling is all open. The geophysics is telling us that it continues. And so as we move forward, there's a huge amount of exploration upside along strike as well as down plunge that we're looking to bring out. So we did some drilling this year. You can see those dark drill holes there. And I'll sort of go through what the objectives of that drill program and how you're going to see that start to come out. So this is a long section of the deposit, and the red dots are all the drill holes that we put in 2024. So you'll see it's a combination of infill, so holes within the boundary of the existing resource. What that was all about was, it's kind of twofold. One, we needed to collect metallurgical sample because metallurgy had fallen behind on this project, and it's a super important component for polymetallic deposits, because you've got to understand really what is the NSR potential, the revenue potential of this, and it's related to how much you can extract into quality products. So that work's ongoing. And come back onto that. But the other thing that we're looking to achieve with the infill drilling is parts of the deposit have only been assayed for copper and nickel in the past, and so we look to, but the other parts of the deposit that had multi-element assaying, it's quite clear that there's quite substantial amounts of gold, silver, platinum, palladium, cobalt within the deposit that you can tell where we have drilled that it's there. Right? There's no questions, and very little of that has been included in the resource update until now. And so what we wanted to do was collect more of that information and that will allow us to name all the metals as part of the resource. So just the existing tonnage that we've got, we looked at add metals that are effectively already there, already discovered. We just needed to get the information. So that was sort of some low-hanging fruit there for us to capture. And then we did step-out drilling. So you can see these holes along the kind of base of the resource stepping out in the gap between the resource. What we found was we knew the resource was open, and so we were testing areas of open mineralization. And where we stepped out, we found mineralization in most of the places. You can see some of these step-out results there. Hole 98, I pull it out because on the next slide there's a section through that. But that's a great hole, big, thick zones of mineralization. Pretty high grades, nice high grade core to it. So that's indicative of the type of open mineralization we had. So what we also did in addition to step out drilling is we did downhole EM. EM's a survey for essentially that detects conductivity out. It depends on how you take it, but in downhole out, gating out around a drill hole. And that's what those blue plates are. Those plates are interpreted conductors that just essentially show the mineralization. We drilled it down to a certain level, and that shows that mineralization extends down to depth. So we know the deposit extends. It's just a function of doing more drilling. It's completely open. So just to take and zoom in on a couple of areas, a couple of important kind of areas. That hole 98, that's sort of what we're looking at here with the downhole geophysics. You can see we extended the mineralization down. We just interpreted it to go up to a nice thin area, but when we drilled down there, that thick zone of mineralization continued. So that's exciting in and of itself. But then when we do the downhole geophysics, you can see how well the geophysics predicts the mineralization up plunge, and as you'd expect, because it is a very effective tool at targeting this type of mineralization. It is extremely conductive. And then at down plunge, it suggests that it continues, quite extensively down plunge, and that's really about the kind of search radius of this system anyway. So we don't know where it stops. It is open, and we know that it's just a function of doing more drilling and finding more mineralization. The step outs that we did in the north, that we're looking to infill some area that didn't have any drilling. So you can see really nice zones of mineralization, shallow in the open pitable kind of zone. We look to articulate what that means in the resource update, but I think you can see this start to fill in. Yeah, again, more conductors that have never seen a drill hole that are off outside of the zones of mineralization that just tell us this. And the conductors really are the highest grade mineralization. That's not to say that's the only place that the kind of surveys are tuned to identify the highest conductivity, most sulfide, which is effectively will be the highest grade mineralization, which is where we want to start and build out from. And so, we just know there's a lot more to find here, more drilling. This is going to get bigger and potentially the tip of the iceberg. There's more work, and we're going to put out some geophysics results of an even deeper, more powerful survey. And I think you're going to see that story get compound effectively. So we're pretty excited about getting that news out. So just regionally outside of the deposit, there's multiple targets, multiple areas of interest. These is a magnetic survey, parallel zone that's of interest. Along strike, there's a really exciting, places to extend mineralization. It's really very little drilling out along strike, and we're looking to grow that resource, particularly in the shallow zones. And you see the drilling that we're doing this year is really targeting more open pitable mineralization. This is...
How much did you drill? How much did you drill in 24?
We drilled 7,000 meters last year because we're doing a lot of infill. We're going to do sort of 1,500+ meters just now, testing some key targets. We've mobilized that drill program already. And this is a zoom in on the south. You can see just the edge of the open of the deposit up there. And this is sort of 400 or 500 meters along strike. We've got some really great mineralization. We've got some geophysics that covers that area that we'll get those results out soon. And I believe there's more shallow open pit resources for us to find, and that's a great way to add value to this project. So we've got a great deposit. We know we can find more, but I'm an engineer. I think about these as mines, not deposits.
Yeah.
My perspective, they're valuable because they can be mined, right? There's no point having $1 billion of value in the ground if you can never get it out. So I'm pretty focused on advancing the story as a project, and metallurgy is really a key piece of that puzzle. So we've done a lot of work in the last 6 months. Those results are going to be coming out very soon. And what we've developed is a conventional flotation flow sheet, copper flotation, and then followed by nickel flotation, a very normal way to process these. And we've got great copper kinetics. We've been put out some of those results like last year. We know the copper, it's chalcopyrite, so it floats really well into a clean concentrated, high recoveries around 90%. Very clean, very marketable concentrates. We're getting precious metals that are flowing into those concentrates. And we've been spending that time since then focusing on the nickel part of the circuit to maximize the recovery of the nickel metal, extract as much of the other byproducts, so those platinum, palladium, gold, silver, cobalt, into concentrates that can be processed within Quebec. That's where we've been focusing our attention, and we're really excited to get those results out. It's certainly something that I know a lot of investors and strategics have been really keen to see the answer to. It is an important part of these polymetallic projects, so we're really excited to get those results out. Just to sort of complete that picture on the development considerations, it is important to have a project that can be developed. We talked about scale of project that's important, financeable access, and those things are related to access to infrastructure. We're not building huge roads or anything, ports or any of that kind of business. We're in a great part of the world. We've got a nice deposit, and the open pit is really key to unlocking the value there. It's got good wide zones of mineralization that can be mined productively in an open pit and also at underground sense when the deposit moves into those deeper zones. We've got good metallurgy that's coming through. We've got that highway that runs by the project, access to infrastructure and location. So they're all the key kind of things we're looking for. This is the highway that runs right past the properties. And anyone that's been to North America knows that what looks like a normal utility vehicle there, that's one of these giant, US trucks. This is a big serious road. It was built to build the hydroelectric power stations in New York. Just had a $300 million upgrade. It's a great thing to have by the project. So look, we have a great project, and to sort of come on to valuation, right?
I was waiting for that one.
That's right. We have an extremely cheap. It doesn't matter what metrics you want to measure it on. To have an advanced project of some scale in the copper space on the ASX is a rare commodity, as you know. And we're extremely competitively valued. Don't forget this is a peer group. Those that agree, I'll explain the graph. The green bars are essentially the scale of the resource expressed in copper equivalent here. The red dots are the value per ton, and in fact, we've got sort of almost an order of magnitude lower valuation. Now, it's been a difficult market. We've been sold off more than others, but I just encourage people to take a look at the assets in other competitive projects and think about value when we know how to add value. We went through some of the things that we're doing to increase the size of the green bars, and other things that we're doing to remove those discounting elements, answering metallurgical test work results and things like that, add geophysics to expand the scale potential. And also this entire peer group is in the toilet, right? The market's been really tough for the juniors. So these are cyclical low valuations that we're talking about for these projects. And so the compounding of re-rate potential as people get to appreciate the quality of the Horden Lake deposit, we move it forward, as well as capital that's going to flow into the sector when sentiment improves. You can really compound your returns. And I don't like to make predictions, but you can really see the potential for multiples here in terms of valuation uplift.
One of the reasons I thought this was interesting is because the ASX has little to no exposure to copper. Like it's really, and obviously if you count BHP, then they take it off, but it doesn't really work that way for investors, right? So there's not many options. You guys have a really strong project that already has proven a lot. Like, of course, you have to, because of your plan, the metallurgy has to be great and you'll have to get there, but it's coming. And you are, in my opinion, obviously, and this is not financial advice, but you are, in my opinion, severely undervalued, considering all these things, like the type deposit, the jurisdiction, where you are in terms of progress of the asset and all the support that you get from Quebec, of course, because the market is shit.
yeah, companies have been left behind, and it's been difficult, and look, not all companies are sort of being treated equal, but and for whatever reason, Pivotal has drifted down. But just encourage people, take a look at the assets, reach out to me. You want to have more detail, watch our results come out, and look, all of these projects, all of the juniors, they've all got technical uncertainties associated with them. That's not unusual. You can pick your poison, and we've got a plan to address out. Take a look at the results, reach out to me, have a conversation, think of it objectively, and if you're into value, then these are phenomenal opportunities, possibly once in a generation or a decade, to get meaningful positions in meaningful assets in great locations for just cents in the dollar. This is a really good example of how the market kind of discounts these projects when no one cares, right? So this is a company called Horden Mining. It's listed on the TSX, and it's been a phenomenal success in the last few years. And they've done a great job. They've attracted fantastic shareholders. It's been very well marketed, and they've been hugely successful. But the point to take away from this graph is back in 2019, I think I had a resource 33 million tons at, it's probably nearly 2% copper equivalent. It was a good resource, but no one cared. It had a $10 million market cap when no one cared. Copper was at its nadir. People it traded at an out of the money option value, right? $10 million. It just, there's nothing here is what the market is saying. And, you'd look at Pivotal and say, there's something I don't know. It must be crap. Market doesn't care. So, market's always right. Okay, well, was the market right here about 4? And you know what? They participate, when copper ripped and sentiment came back to this, they raised a lot of capital. They moved this project forward. They completed a pre-feasibility study. They drilled out the resource. They grew it. What they didn't do is they didn't make a new discovery. So people, they traded, 30 times equity lift, and then it went to, ultimately has gone to kind of nearly 60. You know what didn't happen in that period? They didn't make a discovery. So people they kind of found a new deposit over here, which may be responsible for some of the re-rate. But, people think that you can only make returns like that through investing in greenfields exploration. It's high risk. Probably like to forget the times that they've invested in those things and they've gone badly. And you'll remember the really fantastic successes where people make 10, 20, 30, 40, 50 times your money. They're great. And the industry needs those, the sector needs those. But here's a company that went 30x, and what they didn't do is they didn't make a discovery. They didn't fundamentally change that deposit. They made it a little bigger. They drilled it out. Obviously, they converted it from inferred to largely measured and indicated. They extended it out. Look, they did from 33 to 40 million tons, and that's great. But it's not a fundamentally different deposit 60 times, right? So don't overthink the market cap of the company. Think about the assets, think about positioning, and remember that things can change, right? Things can change quickly in this market, and try to find quality projects and quality locations. And you can be very successful doing that. And the downside, you sort of can put floor around your downside if you've got companies with assets, not just exploration projects with ideas and visions and geophysical anomalies that light up like a Christmas tree. We've all seen those. These are tons on the balance sheet, tons of copper on the balance sheet. Like there's real assets there that back this company.
Yeah, this reality that there's two ways to make, there's more, but there's just finding the early stage wins is not the only way. This is a valid option that doesn't get as many, from not promoters, but it doesn't get as much hype or as much conversation because it's kind of boring, right? So it's systematically continuing doing what you were doing before and that you were doing well, but it's still a feasible thing to do.
They're great businesses, they're great assets to own. But look, the market wants excitement as well. And that's probably where the second part of the story comes in. Great segue. I don't know, it's like you must have done this before or something. So we've got exploration upside on our main project, and it's incremental to what is already a good project. Step out, make that project bigger. And when you see some of the geophysics, you can start sort of dimension what the scale of that opportunity is. But we've also got some other projects in Quebec. So we call this the BAGB. So BAGB is an acronym for the area that they're in. So Belterre and Glazed Greenstone Belt. That's the large greenstone belt that we have probably the majority of. We own 100% of this asset as well. And of this ground, and I'll show you a map of it in a second. It's in a great part of the world. It's an hour from from Miranda, which is kind of the center of what they call the Abitibi. So Abitibi is a real world famous jurisdiction, and there's many mines. They built a copper smelter there because of the scale of the metal that's being pulled out of that region. A huge gold mine, multi-million ounces per year come out of this region. So it's a very productive part of the world, and it continues across into Ontario as well. And that's why this part of Quebec is a mining hub, is because of the productivity of that system. We're 100 kilometres south of that. We've got this greenstone belt that runs through here. We own 100% of some really exciting parts here. This is a fairly large land holding. And on these properties, we've got really bonanza grade nickel PGM, nickel copper PGM mineralization, if intrusive type. And what's been found is relatively small bodies, but super high grades. You can see some of those drill results there. You kind of don't see grades like that every day, and that tells you it's a very intense mineralizing system. And we have ground that, when you get into the detail, we're looking to we're going to be introducing these stories in a lot more detail. So we're going to be doing some work on these projects this year. So kind of keep an eye on it as we continue to move these forward. But we've got a lot of ground. And outside of those known discoveries, it's really not been explored at all. There's a fair bit of sort of the base level of information, geophysics, some sampling has been done. We've got great databases in Quebec of information, but drilling, it's almost completely undrilled outside of those deposit areas. And we've got not only a high grade nickel PGM, we've got some really high grade gold down in the Lorraine project, bonanza grade stuff. Watch this space, and this happens to be a long strike from the ground that sits in here. This is zoned by a very interesting development that's just sort of played out over the last couple of months. So this project over here is the yellow dots it's a historic mine called the Belterre Gold Mine. They produced a couple of million ounces back in the 60s, so it was a fairly important mining area. Now that mine ground now is all consolidated and owned by a company called Vior Gold. Now Vior has just had a new management inserted into them, and they're the guys from Cisco. So Cisco Mining, I think it is. There's many Cisco companies. I'm pretty sure it's Cisco Mining. They sold the Windfall project to Goldfields for $1.6 billion. They only had 50% of that project, and they sold it for $1.6 billion. Like, these guys are serious. Now, they are now the management team for Vior. They are raising $40 million. Vior is about to have $50 million in their bank account, aggressively exploring down in this part of the world. So that tells you something about the prospectivity here. We've got the ground that's contiguous, actually, on both ends of their property. The Force, they own that area in there. So there's a lot going on down here. It's very prospective. It's earlier stage exploration, but it's got that high torque exploration upside. And so we can our sort of vision as a company is to be moving Horden Lake forward. There's huge value case there. We've got engineering, we've got sort of exploration to build on that, and engineering, like, metallurgy and stuff to build on that story and de-risk that. And then we've got some really exciting stuff to keep the market interested, and exploration. People love new discovery potential, and that's what we've got down here. So we've got quite a lot of news flow coming out ahead of us. Like I said, geophysics, metallurgical test work, drilling, resource update, more exploration down at BAGB. And we've got the right commodities. We've got value underpinned by Horden Lake, in a big way. We've got a great project there that's large and established, and it's there. You can't take that away. And we've got that exploration engine with things like BAGB, as well as the bigger scale upside at Horden Lake. Jurisdiction, I think I've said enough about Quebec, but it is a great place. And that news flow creates catalyst that give people the opportunity to participate in and see the value increase as we do that work necessary to build on the story.
I think you suffered from what everybody else is suffering, like going back to the valuation. So it's not that you've done anything wrong. Like, you have something great. You have a very good asset that, of course, you still need to work on, as most of the companies in the sector. Like, that's how you do it. But I think you have all the indications of something really meaningful here.
That's right. Yeah, we got all the ingredients, and we got to put them together. We got to do the hard work. We got to show people we know what we're doing, and you do the right stuff on the asset. And when the market kind of frees up a little bit, and this is sort of mean reverting type industry that we're in, and we're definitely somewhere near the bottom. So I like to think the view aces are. Yeah, look, always reach out to the company if you'd like more information. It's my job to explain the story to people, and more than happy to go through the.
Yeah, I think that part is also really important. Like, if you have a question, if you are interested, want to hear more, Ivan is super approachable.
Thanks. I really appreciate you having me on. It's great to share the story with you, and hopefully people have got something out of it. And yeah,
it was really great talking to you. I'm glad we could do this today.
Thanks a lot, Pal. Great to be on.